Is buy-to-let property investing dead? Is it over? Well, if you talk to a lot of newer investors, yes it is. If you talk to the old school, the old guard who've been doing this for 10, 20 years, they'll tell you use the cookie cutter method. Do one, do another, build the base of your pyramid before going to more advanced strategies. While new investors are throwing themselves into rent-to-rents, into HMOs, into service departments, into commercial, into conversions, and all these other creative strategies. So what is the right decision? What is right? Should you be doing buy-to-let, or is buy-to-let dead? Well, let's look at the pros and cons of buy-to-let compared to other strategies. So let's look at the pros and cons of a buy-to-let. Like, why are these older investors telling you to do buy-to-lets? So here are the pros and cons. Let's start with the pros. The first one is that it's very easy. Buy-to-lets are very simple, right? You buy a property, you put a tenant in there, and then you let the tenant live there, right? It becomes very low maintenance because the tenant pays for most of it. The tenant pays for the utilities, they pay for the council tax, and hopefully they'll live there for a very, very long time, meaning it also becomes very passive. Even if you don't use a letting agent, if you use a letting agent, generally it's very, very easy. It's also very scalable, and this comes down to the financing, right? So because buy-to-lets are so predictable, are so simple, the banks really like buy-to-let portfolios, and they're willing to lend to you for them, meaning you can cash out, you can refinance, you can pull money out and put into new projects. As the property goes up in value, as you accumulate cash flow, you can keep investing and build up a nice portfolio over time. So these are the pros. This is why people like doing buy-to-lets. Now the question is, why isn't everyone doing buy-to-let? So why isn't this the favorite strategy of everyone? Well, it used to be, but it's not as trendy anymore. And the reasons are because the ROI, the return on your investment, is pretty low compared to other strategies. The cash flow is a lot lower because you only have one tenant in there. Compare that to, for example, an HMO where you have one property with multiple tenants that gives you a higher cash flow. And because of that, other sources of financing can be tougher, right? The banks are easy, they'll love this. But other sources, because there isn't as much return to split, it might be harder to cover it through angel investors or crowd funds and similar sources. So those are the pros and cons. And let's look at some other strategies to see, is this the right strategy for you? So there are some other alternatives. There are other things you can do. You could do flips. You could buy a property, do it up, and sell it, or buy it at auction and sell it, or buy it outside the auction and sell it through the auction. Anything to get more money out than you put in. You could do an HMO, generally much higher cash flow. That was very trendy a few years ago. Now a lot of people are throwing themselves into things like service departments as well, which has become really trendy, as have rent-to-rents because they take less money. You rent a property and then you rent it out at a higher value, meaning you don't actually have to buy the property. That also takes you into lease options. Lease options is actually you can lease option and do it as a buy-to-let. This is actually more of an acquiring strategy, but it is different and it has slightly different rules than your classic buy-to-let investment because you're not buying to let, you're leasing to let, right? You can do commercials, right? You could do rent to companies on longer term leases. And also self-storage has become popular in the recent years, where instead of, you just have a pretty cheap building, instead of having to have a high, living grade property, you have a cheap building, you split it up and you get a very high square meter price. Obviously, there are things you need to know to be able to do it. You can do conversions, get high returns on converting a townhouse into a block of flats, a pub into flats, and so on, or straight up development. So there's a lot of things you can do. So what can we conclude? What is right for you? Well, I can't tell you that in this video because it will be different for you to someone else. For some, buy-to-lets is the perfect strategy. For others, it's rent-to-rent. For others, it's HMOs. A part of that will be your financial situation, right? A part of that will be your goal. Where are you starting and where is it you want to go? Based on that, we need to set your strategy. But another is just your personality. We use a lot a tool called Wealth Dynamics, which allows you to see what is your personality type. Some people are very much, we call them traders, meaning they like having a system and they do it over and over again. My original mentor
was a trader. He did 300 identical buy-to-lets in the same city. So basically what he would do is he would go out, he would acquire a property, he'd build in the build team, they would have the same spec every time, they'd build it, he'd rent it out. It is very repetitive. Some people love that. Others don't. Others are more creative. So they love doing more maybe conversions or developments where you can think about it. One of my mentors were doing a golf resort together in South Wales. Well, he walked out onto this big plot of land and he just saw it. He saw the golf course, he saw the driving range, he saw the spa, he saw the conference center with the outback where you can like do fire walks and all these amazing things. He just saw that. He walked out and just that was his passion, and we created that. There are others, self-storage. That means you got to do some marketing. You got to get people to actually know that this is self-storage. You have to build a system to handle this. So there's a different skill set again. So all these different strategies have different skill sets. So if someone tells you the only strategy in 2022 is rent to rents, that only means it's the only strategy for them. It doesn't mean it's the only one for you. Every strategy is applicable right now. If you're okay with 10% returns, that is really, really trustworthy, that is consistent, and will continue over time, buy-to-let is an amazing strategy. But if you're looking to make 20, 30, 40% return, no, then buy-to-let is not a reasonable strategy. Then you might have to use one of these other strategies to do it. So find what is best for you. Look at where are you now and where are you going? And that will tell you the strategy that is right for you. So is buy-to-let dead? No, absolutely not. But it might not be the right strategy for you. So thank you so much for joining us today. Please make sure you like this video. It really helps us get more people to see it, but also it allows us to work with our partner Eden Reforestation Project, where we actually, for each like on any of our YouTube videos, we plant a tree. So make a difference today. Click that like button, please. And also, welcome to Momentum Property Education. I'm Daniel Wood, I'm one of the founders. Please subscribe to our channel. Every single week we got videos about property investing, about the market, what's going on, interviews with top experts like Kim Kiyosaki, Jordan Harbinger, Simon Zucci, Shimon Rudish, Ben Chai, many more. And of course, we teach you about how to create passive income and live that dream life you deserve. So thank you so much for joining us today. I'll see you soon.